Good morning officially. Welcome to the Market Watch Group Monday Market Kickoff. My name is Scott. I will be your host. We remember the first year. I know it's so fast, Sandy, right? That's funny. Love that. Good morning, El Jago. Good to see you. Okay. Got it. I'll take a look. And Bob Walker, I know I have something from you. So if I don't see it, I'll just reach out and I'll be like ping, ping and see if it gets to you the other way. I'm not sure what's going on there. So, okay. Disclaimers. Keep in mind, as always, this is for education illustrative purposes only. Nothing we do or say should be construed as a recommendation to buy or sell any financial security. We're not brokers. We're not advisors. But we are best friends. Let's get going. What are we going to do today? The futures, the news, and we watched it last night. It was a little worse. It got better, right? Last night was a little bit negative, and this morning kind of flat. So it's like, all right, let's see what happens now. What's the news? Make some money. That's it. The economic calendar, not much today. It's an employment week. So there's plenty coming towards the end, but a little bit light early on. Watching some earnings, watching some global news. The Russia situation seems to be coming to a head as recognition. I'm not sure where we thought this thing was going to end up, but I kind of felt like this was where it was going to be the whole time. Entrenched. Maybe some trade war information. I don't know. I guess we're going to see. But definitely going to still be seeing some earnings announcements. And then watching to see, is there? That's the question, because you've heard a few people throw it out. They said, I've heard that people are laying off. My buddy's, blah, blah, this pre-tariff layoff talk. And I don't buy it until I see the data. I just think, maybe there's been some measure of that. But is there a wave, right? And we've talked about the government layoffs and the impact. But then we're like, well, wait a second. They're on 9 months. I think that was the consensus. Did anyone look it up? Or are we just kind of all sort of remembering and then saying, yeah, we'll go with that? I should probably look it up. But I do believe it was a 9-month severance. So there won't be benefits that reflect that now. And I think that the intention and hope was that 9 months gives time for then those jobs to be privatized, right? To be absorbed either, well, I guess re-governmentized if they go back into a public sector or something, right? But that hoping that it doesn't have that wave of newly unemployed and also not receiving any kind of supplemental severance benefits. So there are projected layoffs from some corporations. However, there's also hiring from corporations to boot. Yeah, I've seen a couple that are right. I saw one Intel, I believe, said 10%. Where I think, is that right? 10%? I've seen a couple of those as well. But nothing that's hit our data that we tend to rely on. That's what I'm saying. In general, so I think in this regard, Kami, these were all special offers where they were just we'll give you 9 months. So anyone could take it and get 9 months. I think you're right. Normally it is, but I think these were Doge offers and they got a full 9 months. Anyway, I don't know. So, okay, what else? Mindset for open trades. I'm sure you've all got a few on. They look like they'll open flat. So the question is, do we get some buyers? Do you keep pushing? Take more profits? Shut them down? If we believe the market stalls and starts to roll over, is your posture enough that you would be putting on some puts, some hedges, or some speculative downside trades? Or have we seen enough initial signs of recovery that you want to see how that plays out first? I mean, look, either way, I think that probably going to keep risk levels fairly controlled still. That's the main thing in this market. We did see an improvement. We'll look at it real quick. Let's get cracking. So our market postures did improve, but only two ways. All about control of risk. That's it. I mean, that's our number one job, right? That's my number one job. Control my risk. If I do that, everything else falls into place. 100%. I agree. What did we get last week? We got this higher low, so we thought that was significant. That gave us a little bit of a bump in our score. But we did not take out this level through here that a lot of us recognize as being pretty substantial and needing. We're kind of at it now, sort of flirting with it this morning, so we'll see. I got to tell you, if we could bust up through and even if we got like near the bottom of this old trend line, if we could just get a couple of days and then we have a pullback, I got to tell you, that feels quite strong. I'd be thinking already I gave it it'll be a new quarter of a point for that higher high. Plenty of time for a pullback. I mean, if that's what we get, that's helpful. We can live with that. We can work with that. Let's look at that posture score. For those who weren't there, that was my improvement. I thought maybe we'll get a full point. When we were talking on Friday, a point to a point and a quarter. It did not do that. It only got 0.75. In fact, it was interesting if you were there or if you weren't there, because I was like, oh my God, I only got a quarter of a point until we got to the VIX. And then I was like, I could have sworn. And then I remembered that the VIX, we did get a half a point on the VIX. That was great. This was the highlight of the week, was the VIX showing some institutional de-escalation that certainly has me wanting to be ready. Okay, a full point over 3. I mean, yeah, Steven is the consummate bull. He's like, it's gotten an entire point from here to here. When we recovered out of that last correction that we had, and that was in the winter, that was like, October, November, December of 2023, it popped into a great market. And when you look at the recovery, it was like 5 points in 3 weeks. Boom, boom, boom. Point and a half, 0.3. I mean, it was massive. So yes, a point over 3 weeks is an improvement. Is it enough to make me think we're about to pop? Not yet. It's not. We don't have enough yet. We don't see it yet. Could we see it building and maybe this week helps? Of course. But that minus 1.75, this is still since March 30th. This is the lowest. No, we were a minus 0.5 before. But in this area, Anyway, yeah, we'll see. I'm optimistic, cautiously optimistic. How about that? Who's with me? Cautiously optimistic. Let's take a quick peek at the futures before we get here. I mean, you can see it's there. Just kind of, it's the same kind of a zone. And we're right at that zone. Marginally up today on the open. What's coming out today? Let's go take a quick peek. Tariffs lead strategic uncertainty of Trump's first 100 days. Bessent said it's up to China to de-escalate the trade war. Oh, okay. Wall Street bear warns stocks not pricing in even a mild recession. I'm just not seeing anything meaningful as I scan the headlines. Tell me if you see something that we should be thinking about here. Nah. No, that's it. Let's take a peek at the calendar just to orient this week. And you can see nothing is scheduled for today. I cannot believe it's the end of April, though. That is unbelievable. Here's the opening bell. Tomorrow, job openings. Okay, we do have job openings tomorrow. I don't remember talking about this yesterday. Did we not talk about the economic calendar yesterday? Because there is a pretty big expectation. Our consumer confidence was like 102, 105 in like November, December. It has really gotten bashed, and they are looking for it to drop even more. On tomorrow, 92.9 to an 80. That's a 5-point drop, so that's pretty discouraging. We'll see if it's as bad as they think it's going to be or worse. We've got job openings is there. Expecting it to. So now you can see it's starting to diminish. But pre-COVID, it was never really above 7 million. So I don't know what to make of it. I wonder if I can get the history of this. No. Brownie points for anyone who can get a quick picture of the job openings over the last, like a line graph over the last, let's say 5 to 10 years, let's say 10 years, pre-COVID and then post-COVID, 10 years, and post that picture in the chat for me to bring over. Because pre-COVID, it was like, 5 million, 5.5 million. Then it started getting a little up there a little bit, but 7 million, 7.4 million, still a good amount of jobs. Especially when you think about one of the things they would talk about is the unemployment rate at 4 point, is it 1? Let's go scroll down. It's coming out again. 4.2. 4.2 workforce is 175 million, give or take. Does that sound right? So unemployment at 4.2 would be 175,357 million. So that's about a job for every unemployed person, theoretically, right? There's 7 million jobs and 7 million unemployed people. And they sort of measure that as like, hey, there's a sustainable labor market there. But it is diminishing a little bit. So we'll see. The news has been saying there is still a lot of spending. So so the news saying something is suspect. That's where when you say those two things. So how can the consumer confidence, whether or not someone, wants to raise concerns with methodologies of some of the data, that's its own separate argument. But for me, I don't trust the news. I don't know if you do. What news was it? That might be. They're like, no. Everybody loves it. It's fine. The data is where I'm going to go because, and again, if you're suspect of the methodology, well, then you should just not include that data and find data that you think I can rely on this data and use this to help understand the market because it's, I can trust it a little bit more. So yeah, I mean, we have spending. It's right here. So are they spending more? Yes. I don't think are you saying Besson? I don't think I trust him either. He's like, everything's fine. It isn't. It is up. It's up 0.4, or I mean, it's up 0.1%. That's what they're looking for it to be up in March, 0.1%. Income is down 0.4% is what they're looking for. PCE, that's good. I mean, if you look here, these numbers for March, and again, these are pre-tariff numbers still, are expected to come back down. And I think that's the problem. Like, this is good, right? So PCE is expected to drop. Is this the forecast? Yeah, that's the forecast. I was like, am I seeing it right? The expectations here are good, but the problem is the Fed's going to look at that and be like, well, it doesn't matter if it doesn't include tariffs. That was the trend already. That's why they've already lowered rates. That was the trend. The trend was inflation's coming down, and as it comes down, that allows the Fed to lower rates and open up monetary policy. Beautiful. Then when it stalls, the Fed stalls. That's what we've seen. They're pausing. They're waiting for what? For the data to show up again. Here's the data. So then everyone's like, oh, well then A plus B puts us to C. And it's like, well, the problem is that, that's all looking at what happened in January and February and March and December, right? But it's not including tariffs, and it's not including, that's what the Fed has said. They're like, look, we're not going to just lower rates hoping that as tariffs kick in, prices come down. That's not how it works. I don't know. I don't think I'm still looking out in July. You tell me if you think I'm wrong. Even if we get good PCE, that's the problem. Ooh, Sandy came through. Who else came through? Bob Walker came through. Now, Kami's not wrong. He said, I would believe it if Goolsby said it. I believe everything Goolsby says. Goolsby for Fed.com. Of course. I believe it if Goolsby says it. He is good, though. Have you guys listened to him? He's a good. I'm like, yeah, I think he'd be legitimately. Here's what we have from Bob. This is the job openings. So you can see this is 7 million right there. Pre-pandemic was about 7 million. And so, like I said, you can see 2016 to 2016, it was still around 6 million, and then it popped up and it was around 7 million. We're still above that. We still have not, it's like right there, it had this big spike up and then just sort of is coming back down. This doesn't show me, any concern. I feel like we're kind of moving back to, I don't know. So if it drops back to 7 million and sits there, I'm okay with it. If it drops below, then maybe when it drops below 7 million. But even then, it was only there for a little bit. But yeah, I'd like to see it kind of stay around that level. If we drop below 7, as I look at where it was pre-pandemic, I think that 7 million is a good number for us to orient around. You can see we got close to it and then it bounced back off of it. That's our number, 7 million. If it drops below that, that's kind of another, for me, I really want to, this has been such a source of strength that if it ever disappears, we have to sort of reevaluate. With unemployment, I'm looking at 3 weeks in a row above 250. That's if it's 1 week above 250, some people will be like, oh, and then all of a sudden it just drops right back down. 3 weeks in a row. One nasty negative surprise, not from the ADP report, but from non-farm payrolls, which is Friday. That's what we have on Friday. And then if this drops below 7 million. So that's, I think, helpful for us to have a situation around. So we have confidence coming out on tomorrow, job openings tomorrow. Wednesday, we have ADP, GDP. That's not good. That's a big drop. 2.4 to 0.4 is the GDP estimate for Q1. So a significantly slowed down Q1 empirically. Consumer spending, we already said, up a tick. Income down a tick. PCE expected to show pretty good progress if it weren't for we all know what. Tariff reveal day. Thursday. Jobless claims still in 220s. And then Friday, non-farm payrolls. Okay, so yeah, is that concerning? 150 is kind of the number, our maintenance number for non-farm payrolls, 150. So yeah, a little concerning. It's not like panicky, but if we're thinking we want 150 for maintenance, and we've been seeing this a lot where they're like, oh, we only are going to get 130, and then it comes out and we get 250. Then everyone's like, oh my God, we just always keep throwing jobs. That's been super helpful because we haven't seen the other way where they're like, we're looking for 130 and we get 20. Or we get a surprise negative number, something like that. That would be absolutely, that would smash the markets. Whatever new confidence it's starting to find, some, abruptly negative employment data is going to be very distasteful to the market. I can promise you that. Okay, let's go look at it now. We've got the first 10 minutes in. Let's pop over. Good start. And we were hoping for a couple of days more, right? So this is great. I mean, it certainly is. You can see big white candle, smaller white candle, and smaller white candle still. And I would not expect that today's volume increases based on what we're seeing here, but certainly that it's starting to decrease. But hey, we can sneak a couple more days just on coasting a little bit, right? So let's pop through some of the trades that we have in place. All right, so I said I'm going to let Walmart go. I think Walmart has an ability to mount a defensiveness about it, even if the market were to start turning. So I feel pretty good about this one. Still going if you're in it. Oh, NVIDIA, you silly goose. Nobody likes to see this type of a inside pattern. Okay, it is what it is. If you booked some on Friday, you feel pretty good about it. If you didn't, you're thinking about what you want to do with this now. Let's go look at our other friend. Luckily, PLTR still holding on to a little bit, but yeah, okay. We've got some decisions to make as we watch this come out of the opening range. I'd like to see it recover. If I see it break down, I might just be done with it. Take the profit that's left and live. Especially if you have a couple of things on and something that's making a little bit and still holding on, you have the ability to kind of play them off each other. Yeah, it's weird. What's the news with NVIDIA? Anyone know? Down 2%. Okay, we'll see if it recovers. Questions, comments, concerns, let me know. Let me see Sandy's picture. She has a double. Let's see what this one says. Unemployed persons versus job opening. Oh, there you go. There you go. You can see what it looks like when this number expands, like at a recession. And then when it contracts, it's kind of hard to see. It's kind of like, you're like, well, what's it doing now? You're like, well, it expanded into 20. This is from 22. That's why. Oh, I would love to see this chart all the way to 24 now. And it's like, wait a second. We're only to 22 here. I'm going to go try to find that Or yeah, that's a cool one. The way that looks, that's interesting to see that expansion. Right, you can kind of see it was late 2007 or early 2008 when you started to see it well in advance, and then you could see when it turned to come back in. I like that. That's a good little indicator, that divergence between those two. Yeah, I'm into that, actually. Goolsby for president. Yes. Non-farm payrolls. What do we have here? Oh, that's an old one, huh? 2011. Okay. Huawei Technologies has an AI chip to compete with NVIDIA. What's wrong with the site? With the just no, Kevin. The NVIDIA chart is on an inside day, but it's already gotten a good amount of it back. So but it's down a little from yesterday, while the rest of the market's up a little. So we never like to be in a trade that's. Other than that, I still feel like this thing has a chance to make a run at this number here. Let's see. Well, we'll see. Okay. Let's look at the SPY. Getting a little bit of a run on it here. So we're now almost into our range. And the buyers are definitely trying to push it. Let's switch back to the VIX, and then we'll run through our watch list and see if anything maybe is setting up. What do we have? I think we have a couple of defensive things. Like Kroger was setting up. TJ Maxx was setting up. There's something else too. There's a few things. The VIX is not really gaining much ground. I mean, but it already, as we said, has done a few things that look good. Okay, let's get to the watch list. Let's get to the watch list. Apple. And again, we kind of said, hey, Apple has a chance that it could make a little run. And it is. It's not time to get in now, though. It's like that's the big thing is, what are we looking for? Now what? That's what we're looking for. Is there... We see the things that we're trading. Those are doing fine. Is there something new? Now that we've managed, and I said this yesterday, my first objective at any given time when I'm looking at the market is to manage where I have skin in the game. I have risk on the line in those trades. I'm going to look at those. I'm going to make sure that they look right. I'm going to make sure that I have a plan, a stop, a target, everything about that, so that I can then say, okay, those are managed. Now let's go see if there's new opportunities to put skin in the game. But you'll notice, obviously, after having, a 4 or 5 day run, most things are going to be overextended. They're going to be overbought. It's not time to get in. It's time to wait for them to have a small consolidation to give us an opportunity. Most things, I said. Not everything. Most things. And some things still have earnings a couple of days away, which also will be somewhat of a disqualifier. But I see a lot of things that I'm like, hey, this is certainly looking a lot better off of its lows. Stephen, have you reassessed the PE ratio anytime recently with this, little 15% haircut? Where are we at right now? Probably 12% down from the highs? 8 off the lows, something like that. Let's see. Non-farm payrolls. Okay, so here you can kind of see now back before 2009, Back in 2008, it was up here, and then all of a sudden, what happened? It starts to drop, and then it starts to recover. So when we see this thing drop down, 128, I don't know about this chart. This shows nothing less than 124 for new jobs. Something weird with this chart. I mean, the trajectory makes sense, kind of, but like, this doesn't show a single month not giving at least 124,000 jobs. I don't know. That's an interesting one, but a little sus. Okay. Celestica. I like Celestica, and it's starting to pull back a little bit. That's potential. Anything that's made new highs and is starting to pull back, I'm going to be like, that looks interesting. Cisco, still kind of moving. That was one that I thought, that's a maybe. Yeah, it looks okay. Delta, no. Flat. Diamonds, no. Duke Energy, still close. I'm also close to earnings, 5.6. 5.6 is, I would need this to turn in the next day or so. I need at least 4 or 5 days for this to be worth it. Nothing there. And Enbridge, Fastenal, no. Still kind of sideways. Flex, still higher. Nothing there. You can see a lot of things are just, I wanted GE Vernova. It just, with earnings, it never gave me the chance, and now you can see it's made that new high. I do think there's some opportunity. I think gold still looks like it has opportunity. I'm going to have a chat with Glenn, see if he thinks so as well. I told you I'm not going to jinx it if Glenn puts it out. But it looks like it could be on his mind. Google looks nice. Earnings were strong, popped, new high, starting to pull back. Let's kind of design a zone. I kind of feel like 150. I feel like this entire zone is open because that's low, higher, low still. And that's a high, higher high. So yeah, anything in this zone is open for me. Starting with the flag, moving into the full pullback. Love to see that. Love to see Google looking strong again. Right? Goldman, need a pullback. Robinhood, need a pullback. Both look good, though. That's nice to see in the financials. And these have earnings, so we got to wait and see what happens there. Howmet, another aerospace. That one's strong. Too close to earnings now. Bitcoin showing a little bit more strength. IBM trying to recover after their earnings gap down. ICE. I mean, everything's kind of chugging along. It's all a bit overextended for trying to get into a trade late in the cycle, but I feel like our posture having improved and looking for more improvement this week is on point. As long as we don't have any kind of a disruptor come out in the market, which, I mean, Coke looks good, but it's right next to earnings. Kroger also looks good, and it's not. So I have Duke Energy, I have Google, I have Kroger. Those are some good ones. Already starting to give some signals. Some pullback signals. Meta. That's a good, they tried here and then they couldn't find their footing and it went all the way back. Tried again. Now what? Well, we just got to wait and see. Morgan Stanley. There's strength in financials. And that's good for us. We're seeing recovery in things like Google, Microsoft, Apple. That's good for us. That's good for bullish. I want to be bullish. I mean, that's a fact. I want to be bullish. Netflix. Nope. Netflix. God, it's just on a tear. Looking good. Looking for a pullback, maybe. It's an expensive stock, though. We got an old resistance there that maybe it settles onto. I don't know. We'll see. I mean, it's got some momentum, though. Netflix. I feel like Netflix is always just an expensive stock, you know? So if it's ever cheap, buy it. And I know, I feel like this just, we got a good trade on this before, but I'm like, I don't even remember where I got it from. I'm tired of watching it, to be honest. I dropped it. NVIDIA. We'll see. Palantir. Looks good. Philip Morris, a little bit of a overextended. Roblox, overextended. Reddit, getting close and close to earnings. Rocket Lab. Yeah. So we do have a few things that I think, you know what? If this set up, I think I would maybe look to do it. RTX. There's SE, Southern. I like Duke better. Most of the market needs a consolidation. Some things have already started to go a little bit early. TJ Maxx. Ooh, TJ Maxx. TJ Maxx. Let's see what this looks like in here. Yeah, that's interesting right there. Well, I feel like I could, put this on, put a stop. I mean, this is like $2, $2.50 away. $2.50 away. Can I get $5? 2 to 1 is right there at 132. 2.5 to 1, a little higher. I'm thinking about it. Toast. Let's get back out of these candles. TPR, Tesla, a little bit maybe overextended here. Looking for a pullback. TSM, Twilio. Yeah, we've got some headwinds. We'll see if this thing can grind out another day or two. So we'll be managing our bullish trades as such. Possibly looking at some defensive trades on things. And then we've got... It just doesn't feel like there's much from a bullish or a bearishness of any kind. Walmart trying to hold on. Here's the VIX, just kind of sitting. All right, we'll see what today brings. Don't forget this week you should have your record keeping in place, and your record keeping leads to your analytics. That's the good part. That's where you get to just look at your numbers and be like, hey, what do I want to focus on to try to get better? Where do I believe I could have the greatest impact on improving these numbers? What numbers do I want to try? So, yes. Questions, comments, concerns. We will be meeting today for a Q&A session, just kind of, open session. We'll talk about trades, obviously. But if you bring questions, We've actually had some great discussions the last couple of weeks. People have had questions that just led to really nice rabbit holes for us to explore together as a group. So if you can join us, that'd be great. Otherwise, it'll be tomorrow night's session with Glenn and I. So there it is. Let's start the week off right. I feel pretty good about where we are, what's going on, and looking for more. Hope everybody has a great rest of your day. See you tonight, hopefully. If not, tomorrow. And as always, happy trading.
Recordings